Breaking news. This just happened. Minutes ago, China's largest bank, the Industrial and Commercial Bank of China, ICBC, the biggest financial institution in the world by assets, has issued a rare public warning on gold and silver markets. And if you're holding precious metals right now or thinking about buying, you need to hear this because what they just said does not happen often. And when it does, it means something big is coming. Let me be extremely clear with you. ICBC does not issue public warnings for fun. They do not put their reputation on the line unless they see serious risk building in the system. And the fact that they are specifically calling out volatility and risk in gold and silver markets right now at this exact moment in the cycle should immediately get your attention, because this is not a casual statement. This is not a suggestion. This is a red flag being waved by the institution that sits at the center of the world's largest gold-consuming nation, the institution that moves billions of dollars through precious metals markets every single week. And when they warn the public, they are not warning for your benefit. They are warning because they see what's coming and they are protecting themselves first. Right now, as I'm speaking to you, gold is trading near all-time highs. Silver has been surging. Retail investors are piling in. Social media is flooded with get-rich gold and silver content. And everyone is talking about how precious metals are the safe haven, the inflation hedge, the ultimate protection. But here's what no one is telling you. High prices do not mean safety. Momentum does not mean stability. And when the world's #1 bank in the largest gold market on the planet comes out and says, "Be careful, volatility is coming," you better believe they are seeing something in the data, in the positioning, in the leverage, or in the macro environment that retail investors are completely blind to. Let me explain why this warning is so dangerous to ignore. ICBC has access to order flow. They see institutional positioning. They know where the leverage is stacked. They understand central bank policy shifts before they hit the news. And they are deeply connected to the People's Bank of China, which has been one of the most aggressive accumulators of gold in the last 2 years. So when ICBC warns about volatility, they are not guessing. They are reading the same signals that big money reads, and those signals are flashing red right now. Here's what this means for you if you're holding gold or silver. Volatility in precious metals markets is not the same as volatility in stocks, because when gold and silver move violently, they do not move in slow, predictable waves. They gap, they flash crash, they spike and reverse within hours. And if you are not prepared, if you are over-leveraged, if you bought at the top thinking it only goes up, you will get destroyed. And I mean that literally, because we have seen this before. We saw it in 2011 when gold hit $1,900 and then collapsed by 45% over the next 4 years. We saw it in 2020 when silver spiked to $30 and then got cut in half in a matter of weeks. And we are seeing the exact same setup right now with retail euphoria at extreme levels, leverage in the futures markets at multi-year highs, and institutional players quietly stepping back. This is not fear-mongering. This is pattern recognition, and the pattern is screaming that a major move is coming. And when ICBC warns you, they are essentially telling you that the move is closer than you think. Now let's talk about why this is happening right now, because timing is everything. And the macro environment we are in is setting up a perfect storm for precious metals volatility. The US dollar is strengthening again after months of weakness. The Federal Reserve is holding rates higher for longer despite market expectations for cuts. Geopolitical tensions are escalating, but not in a way that is driving sustained safe haven demand. And most importantly, speculative positioning in gold and silver futures is at levels that historically precede major corrections, because when everyone is on the same side of the trade, when leverage is maxed out, when retail is all in, that is when the smart money steps aside and waits for the panic. ICBC knows this. They see the futures data, they see the ETF flows, they see the option positioning, and they are warning you because they know that when the unwind starts, it will be fast, it will be brutal, and retail investors will be the last ones to react. Here's the part that most people do not understand. Gold and silver are not just inflation hedges, they are also dollar-sensitive, rate-sensitive, and sentiment-sensitive assets, which means they do not just go up in a straight line because inflation exists or because central banks are buying. They move based on real-time shifts in currency markets, interest rate expectations, and risk appetite. And right now, all three of those factors are shifting in a way that is extremely dangerous for precious metals longs, because the dollar is catching a bid, real yields are rising, and risk appetite is rotating back into equities and away from safe havens, which means the very foundation that drove gold and silver higher over the last 18 months is starting to crack. And when that foundation breaks, the sell-off will not be gradual, it will be violent. ICBC is seeing this setup, they are seeing the cracks, and they are telling you to be careful. And if you ignore that warning, you are essentially betting that this time is different, that the rules of market structure have changed, that somehow retail investors with no access to institutional data, no understanding of futures positioning, and no risk management plan are going to outsmart the biggest bank in the world. And I can tell you right now, that is not how this ends. Let me be even more direct. If you bought gold or silver in the last 3 months because you saw it going up, if you are using leverage, if you have no exit plan, if you are holding because everyone on social media told you it only goes higher, you are in serious danger right now. Because the market does not care about your conviction. It does not care about your thesis. It does not care about what some influencer told you. It only cares about supply and demand. And right now, the supply of willing buyers at these levels is drying up, while the supply of over-leveraged longs, who will be forced to sell on any pullback, is massive. And that is the recipe for a cascade, for a liquidation event, for the kind of move that wipes out months of gains in a matter of days. ICBC is not warning you because they are bearish on gold long-term. They are warning you because they know that in the short term, the risk-reward is completely broken. And if you do not have the experience, the capital, or the risk management to survive a 10%, 15%, or 20% drawdown in a matter of weeks, you should not be holding size right now, period. Now let's talk about what smart money is doing, because while retail is buying every dip and chasing every breakout, institutional players are doing the opposite. They are taking profits, they are reducing exposure, they are buying put options, they are hedging their positions, and they are waiting because they know that markets do not move in straight lines. They know that every bull run ends with a shakeout, and they know that the best time to buy is not when everyone is euphoric and prices are at all-time highs. It is when fear is high, prices have corrected, and leverage has been flushed out of the system, and that moment is coming. ICBC is essentially confirming that for you, and if you are smart, you will listen. Here's what you need to understand about institutional warnings. They do not come after the crash. They come before because institutions protect themselves first. They warn the public second. And by the time the crash actually happens, the warning is forgotten and everyone is surprised. But the smart money was not surprised. They saw it coming, they positioned for it, and they profited from it while retail investors got crushed. This is not a conspiracy. This is not manipulation. This is just how markets work. Information flows from the top down. And by the time it reaches retail, the move has already started, and right now, ICBC is giving you information from the top. They are telling you that volatility is coming, that risk is elevated, that precious metals markets are not safe at these levels. And if you ignore that, you are choosing to be on the wrong side of the trade. Let me also address the narrative that gold and silver are going to the moon because of central bank buying, because of inflation, because of geopolitics. Because yes, those are real factors, but they are long-term factors. They do not prevent short-term corrections. They do not prevent volatility. And they certainly do not prevent over-leveraged retail traders from getting liquidated when the market moves against them. Because the market does not care about your long-term thesis when you are holding a leveraged position that gets margin called on a 5% move, and that is exactly what ICBC is warning you about. They are not saying gold and silver are going to zero. They are saying that the path from here is going to be volatile, that corrections are coming, that risk is elevated, and that if you are not prepared, you will lose money, plain and simple. Right now, the setup in precious metals is almost identical to every other major top we have seen in the last 20 years. Prices at or near all-time highs, retail sentiment at euphoric levels, leverage at extremes, institutional players reducing exposure, and macro conditions starting to shift in a way that is negative for the asset class. And every single time this setup has occurred, it has ended the same way, with a sharp, painful correction that nobody saw coming except the people who were paying attention to the warnings. And ICBC is giving you that warning right now in real time, and you have a choice. You can listen, you can protect yourself, you can reduce risk, you can take profits, you can hedge, or you can ignore it. You can assume it is different this time. You can keep holding, you can keep buying, and you can hope that the market will be kind to you. But hope is not a strategy, and the market is never kind to people who ignore warnings from the biggest players. In the game, here is what you should be doing right now if you are exposed to gold and silver. First, assess your risk, know exactly how much you have at stake, know what a 10% or 20% move would do to your portfolio, and if that number scares you, reduce your position immediately. Do not wait for confirmation, do not wait for the crash to start, because by the time it starts, it will be too late. Second, if you are using leverage, close it right now, because leverage in a volatile market is suicide. and ICBC is literally telling you that volatility is coming. So if you are holding futures, options, or margin positions, you are playing with fire. Third, if you have profits, take some off the table. You do not have to sell everything, but taking profits when the world's largest bank is warning you is not weakness. It is intelligence. It is survival. It is how you stay in the game long enough to win. Fourth, if you are thinking about buying right now, do not wait. Be patient. Let the volatility play out. Let the market shake out the weak hands and then reassess, because buying into a warning from ICBC is not contrarian. It is reckless. And finally, remember that preserving capital is more important than chasing gains, because you cannot make money if you are broke. And the fastest way to go broke in markets is to ignore warnings from the people who have more information than you. ICBC is giving you a gift right now. They are giving you information that most retail investors will ignore. They are telling you that danger is ahead, that the path is not clear, that volatility is coming. And if you are smart, you will use that information to protect yourself, to reduce risk, to prepare, because when the move comes, and it will come, there will be no second warning. There will be no time to react. There will only be winners and losers, and the winners will be the people who listened, who prepared, who respected the warning, and the losers will be the people who ignored it, who thought they were smarter than the biggest bank in the world, who believed that this time was different, and who paid the price for that arrogance. This is not about being bearish. This is not about calling a top. This is about respecting risk, about understanding that markets move in cycles, about knowing that every rally ends, and about recognizing that when institutions warn you, they are doing so because they see something you do not. And right now, ICBC sees danger, they see volatility, they see risk, and they are telling you to be careful. And if you have any respect for your capital, for your financial future, for your ability to survive in these markets, you will listen, you will act, and you will protect yourself, because the market will not wait for you, the correction will not announce itself, and by the time everyone realizes that ICBC was right, it will be too late for most people. But it does not have to be too late for you. You have the information, you have the warning, now you have to decide what you are going to do with it. Disclaimer: the content provided in this video is for educational and informational purposes only and should not be construed as financial, investment, legal, or tax advice. The views and opinions expressed are based on publicly available information and market analysis and do not constitute a recommendation to buy, sell, or hold any financial instrument, including gold, silver, or any other asset. Precious metals investing carries significant risk, including the risk of loss of principal. Past performance is not indicative of future results. You should always conduct your own research, consult with a licensed financial advisor, and consider your individual financial situation, risk tolerance, and investment objectives before making any investment decisions. The creator of this content is not a licensed financial advisor and does not assume any liability for decisions made based on the information presented herein.